We hold a huge stack of Bitcoin, about $74 billion worth of Bitcoin. Bitcoin's a 21-year duration asset. You got to hold it for 21 years if you want the full potential. And it's about 50 vol and 50 ARR. Most people don't want that amount of volatility, even though it's got that performance. And who wants to wait 21 years? So what we've done is we've created structured Bitcoin in the form of Strike, STRK. We give you the Bitcoin upside.
Bitcoin's bullish momentum shows no signs of slowing down. The leading cryptocurrency is currently trading just above $120,000, edging closer to its summer all-time high. Technical indicators remain decisively strong, supported by rising trading volumes and a solid support base near $118,000, all of which reinforce the ongoing upward trend. While a short-term correction toward the $110,000 to $112,000 range remains possible, many analysts interpret such a move as a healthy consolidation phase before the next potential breakout toward $124,000 or higher by the end of the month. Importantly, sentiment metrics show neither excessive greed nor fear, a balance that often signals sustained investor confidence rather than speculative frenzy. Fueling this optimism is growing real-world adoption and the emergence of scalability technologies such as Bitcoin Hyper, which promise faster, cross-compatible transactions across networks. Meanwhile, Michael Saylor has officially declared the bear market over, reaffirming his bold prediction that Bitcoin could eventually reach $1 million. He reiterated his long-standing belief in disciplined accumulation, noting, "If you keep buying Bitcoin, you'll keep building wealth." With robust price action, expanding institutional infrastructure, and enduring confidence from long-term holders, Bitcoin's position as a core asset in both retail and institutional portfolios appears stronger than ever as the market heads into the final quarter of 2025.
Guaranteed dividend and principal protection, and that's an alternative for people that don't want the roller coaster. We've created a long-duration senior credit instrument called Strife. Think of it as a 21-year Bitcoin-backed bond, pays about 8.5% dividend yield right now for people that just want that quarterly dividend yield and a seniority in the capital structure. And then you've got a high-yield long-duration instrument called Strife. It's actually paying like 11.5% dividend yield right now, and so that's for people that want high yield forever, and they'd rather have 11% quarterly than take that's guaranteed than the roller coaster of Bitcoin. And then the most exciting thing we've done just a few weeks ago, it's the biggest IPO of the year. It's called Stretch, STRC. And STRC is like a monthly Bitcoin-backed bill. And so think of it as a Bitcoin alternative to treasury bills or money market funds. It's 9% dividend yield, monthly cash pay. And if you just want to park short-term cash and get paid 9% dividends and have it powered by Bitcoin, you're not taking duration risk on the interest rate. You're not taking the Bitcoin volatility. And that's our most successful offering to date. Well, right now we've had really extraordinary demand from retail. In our last offering, I mean, we started with about 30 or 40 million of retail demand on the first preferred, and then it increased to 60 million on the second preferred, and then 120 million on the third preferred, and about 600 million on the fourth preferred. So retail's off the charts. We've also got a lot of institutional long investors, people that are holding it. Look, if you like Bitcoin or if you like MSTR, these are all pretty compelling for any pool of capital you've got. And then, of course, a bunch of hedge funds also got very excited about this. There's lots of different ways to trade these against each other. So a good mixture of institutional as well as retail investors buying into all these preferreds.
Saylor emphasized that Bitcoin remains in the very early stages of global adoption, estimating that around 95% of investors worldwide still have no exposure to it. This statistic highlights just how distant Bitcoin is from mainstream acceptance and how much potential remains untapped. He compared Bitcoin's current phase to the Internet in 1996, a period of innovation and infrastructure building that preceded the Internet's explosive worldwide expansion. The parallel suggests that Bitcoin, too, is still at the beginning of its exponential growth curve, with vast upside potential as adoption accelerates. Although the number of Bitcoin wallets continues to rise steadily, Saylor noted that true user engagement, measured by active participation and integration into everyday transactions, remains relatively low, reinforcing that the market is still in its exploratory phase. As individuals, corporations, and financial institutions begin to integrate Bitcoin into their operations, its network effect could drive exponential adoption and valuation growth over the next decade. In contrast, Tom Lee takes a broader perspective. He's less focused on short-term price fluctuations and more attentive to the long-term trajectory of user adoption and trading volume. To him, Bitcoin isn't just an asset, it's a transformative technology, one that's steadily redefining the architecture of global finance and setting the stage for the next era of digital economic systems.
It does. Bitcoin is digital gold. It's going to accelerate the migration of capital from physical gold to digital gold. Bitcoin lives in cyberspace, no tariffs in cyberspace. The big appeal of Bitcoin is it's not physical, it doesn't have weight. You can settle anywhere with anybody in a few minutes. And so gold has always been too heavy, too slow, and you can't really ship it across an ocean. And if you do, now you're getting tariffs. So I really think it just reminds everybody why the digital version of gold is better than actual physical gold. And I think it's going to catalyze a new wave of institutional adoption of Bitcoin. I still think the vast majority of the capital flowing into the space is flowing into Bitcoin. We've gone from about 60 companies capitalizing on Bitcoin to 160 companies just in the past 6 months. So I'm laser-like focused on Bitcoin. I think Bitcoin is digital capital. I think it's going to outperform the S&P index over the indefinite future. And I think it's the clear global monetary commodity in the world right now. So it's the lowest risk, highest return, most straightforward strategy if you want to outperform the S&P and if you want to inject vitality and performance into your balance sheet. I think there's an explosion of innovation across the entire crypto economy, and on the margin, it's really good for everybody in the digital asset space right now. I think the big idea is $100 trillion plus of capital in the traditional equity capital markets and traditional credit markets. And what we're focused on is delivering digital asset-backed equity and digital asset-backed credit. And I think those credit instruments and equity instruments are just going to outperform the traditional fiat credit and traditional fiat equity instruments.